All right. Good morning, good afternoon, good evening, wherever you are. Welcome to New York session. Today is Thursday, 29th of May, 2025. We've got 2 days more, and then we put May to bed, and then we welcome June. Let's start with the dollar index, shall we? Okay. So, dollar index, we went up as we were expecting, and I'm expecting a reversal, and it looks like we are getting one. We gapped up, and we are back down to where the gap happened. So if we can trade through where the gap happened, right here, if we can close below that, then I think we'll be going down, and I think that might be what is going to happen. I think that might be what's going to happen. So personally, I'll be looking for a move to the downside on dollar index. Okay, and the reason why I'm expecting that move to the downside literally is because all week we've been going up, and I said that if we go up, we'll be expecting price to form the high of the week. Monday we didn't do much. Tuesday we went up. Wednesday we did. So today might be the high of the week. This rejection happened during the London session. There's something about reversals. So true reversals will form during a particular session. Okay, true reversals will form during a particular session. Hence, if we have price rejecting during the London session, that might be the true reversal. All right, but it needs to break the market structure. Hence, we need that gap, okay, to close through. Now, look at the gap, the origin of the gap as a down candle right here. And that's a down candle. Or view all the gap up, right, as a down candle. So if we can trade through that down candle, then it's a break of structure, and then you expect price to go down. So that will be the same for the euro. Will be going up, and you can see it's same thing, right? Monday, this is where I wanted them to start the weekend trade to form the low of the week, and it went up first. And this is a beautiful price action that you can quote unquote log if you want to, or just remember it that when the week starts and you're bullish, you want price to move down first. This is not negotiable. Now let me talk about it before I continue. The reason why I'm patient with price is because I understand certain things. I understand certain principles. So I don't chase, I wait. If price is not giving me what I want, I sit and wait. Okay? And you are going to need to do that as well. If you don't, you might always end up being liquidity. Why is that? Why am I saying this? This market, as you see it, okay, it's not what's the word I'm looking for? It's not random. Okay. The market is not random. Everything is precise, everything is done on purpose. So the logic behind why it does what it does, one of them is the power of 3 or the weekly profile, where when the market opens, there's a high probability it's going to manipulate. Listen closely. When the market opens, there's a high probability it's going to manipulate before it expands. Whether going up or down, it doesn't matter. It needs to manipulate first. And this happens majority of the time than it doesn't. Including the higher time frames that the market is going to open, it's going to manipulate, and it's going to expand. So with that understanding, when the week start, you need to know whether you're looking for higher prices or you're looking for lower prices. That should be your first price action, or that should be your idea that you're gonna go in the week with. Okay, that would be the idea you go into the week with. Are you looking for higher prices or are you looking for lower prices? Okay, that's your idea when the week start. Now, when the week start and you are looking for higher prices, then you need to see price trade below the opening price. Okay, you need to see price trade below the opening price. So if this is the opening price, let me draw. If this is the opening price, all right, if you are bullish and price opens here, you need to see price trading lower first. All right, you need to see price trading lower first. Okay, so as I was saying, if you are bullish All right, you need to see price trade down first. This is a must. Okay, this is a must. If you do not see price trade below the opening price on Monday, then you might be seeing some form of a manipulation for the week. Hence, for example, if we open and Monday price goes up like this and you are bullish, you need to sit on your hands and wait. One, you cannot buy, because if you buy, you might end up being liquidity for the manipulation to happen either same Monday or on Tuesday. Price will come down and you be liquidity. Or if you buy, you might end up expecting a continuation, and then Tuesday is when the market will actually come down to take out Monday's low and then reject and start coming back up. So if you are bullish, this, what I'm saying here, is a must. Monday should trade down. Okay. If you are bearish, when the market opens, Monday should trade up. Again, this is a must. If you do not see it, you need to go into scalping mode, or you need to sit on your hands and wait, because something else might be happening. Okay, whatever is happening might be manipulation, which is, if I'm bullish and price goes up on Monday, then you might be seeing price forming a high to now come down, and that movement down might continue going down, or it might just drop to become a weekly reaccumulation candle, which will become a weekly down candle. Okay, so these ones are very, I won't say hard to trade. You need to know what you're doing. That's what it boils down to. You need to know what you're doing, because if you don't know what you're doing, this sort of price movement can, quote unquote, destroy you, because you might not understand why price is doing what it's doing. Okay, you might not understand why price is doing what it's doing. So when I say it's a must, it's a must based on the algorithmic principles. That is how it's supposed to deliver. So when it starts going up on Monday, straight away you should be thinking, this is not right, something else is happening. And that's what you see, or that's what you saw Euro did this week, where we opened, okay, instead of us going down first, we actually went up first. That is a sign that something is happening. It's either one, they are going to just expand up, which is a continuation where the daily candle keep closing bullish, 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 or that Monday is going up to draw in buyers, and then they'll use them as liquidity to send price lower before going up. Okay, and if you're not patient enough, you will get murdered when price is doing something like this. That is why when we start the week and price goes up first and I'm bearish, that is exactly, it doesn't matter. I can go up Monday, Tuesday, Wednesday, Thursday, it's fine. You sit and wait for the reversal, because if we are truly bearish, it will happen. How will it happen? It's going to happen during one of the kill zones, or one of the trading sessions between Monday, Tuesday, Wednesday, Thursday. Okay, so yours is to just sit and wait. That is all you have to do. So if you are bearish and then price goes up first Monday, great. That's exactly what you want. Tuesday, great, perfect. Wednesday goes, that's even much better. Why? Because when it's doing this, all that price is doing is drawing in buyers to go against them. And then the more reason why it's much better is because you have more room to the downside for profit. Especially, okay, this one is good, especially when you have like a previous week high rate. So when you have this sort of price action, when they took out a previous week high and then price traded down and then it left like this, it closed like this, and then we open a new week. When you open a new week, this is much better, because when they go up, be expecting this low to be taken and that low to be taken. So it's just a matter of time. It's just a matter of time that price will reject and then come back down to trade below this low and potentially that low. Okay, so that is what crude oil, as an example, did. Okay, so if you see crude oil right now, okay, this is perfect. We open, instead of us going down, we started going up. We're going up. Monday, Tuesday, we're going up. That is giving room for the fall to be bigger. Okay, it's just giving room for the fall to be bigger. And that's exactly, if you are trading, this is what you want. You need to understand how the I would say the smart money, I'm looking for interbanks. You need to understand how, you know, they pick position, because as this is going up like this, there's someone actively selling. This is not a buy. Someone is actively selling. The move up is engineered. Okay, so it's just a matter of time that price will reject. All you have to do is sit and wait for it. The rejection is going to happen, like I said, mostly between Tuesday, Wednesday, Thursday, if it starts going up. If it happens on Thursday, that is perfect, because that will give a strong indication that price is actually bearish. And usually highs and lows that are formed on Thursday, they are long-term in nature. This high here, if it ends up being the high of the week, price is actually gonna go down, because Thursday's reversals are on Thursday. They are this high is actually gonna go down long-term in accumulate a lot of buy or sell orders. Sometimes it will continue going down, even on Monday, Tuesday, for the following week, it will continue on in that direction. Okay, so this is very important. That's why I'm taking my time to explain it. Okay, because most traders fall for the trap, and you know, they end up being liquidity for the market, which sometimes it can be very painful to experience, because you chase the move, and by the end of the week, it's like you get a buy, but you end up being used as liquidity, so you end up losing. Even if you made profit beginning of the week, you end up giving that profit back to the market. So for example, even with the euro, right, all the drop that happened, this is all manipulation. So they manipulated both buyers and sellers. Anyone that bought here now is basically crying, and then anyone that sold here, especially this candle, anyone that sold that now is even crying more, because that last drop was the icing on the cake, or the straw that breaks the camel's back. That is what most traders will chase. because they're gonna feel left out, and then they'll chase that, and then price reverses, because this candle is emotionally charged, this particular one, right? Everybody will see it. Okay, it's very very important thing that I'm talking about here. So you're gonna need to be able to quote unquote decide the first thing: are you bullish for the week or are you bearish for the week? You need to decide that before the week start. Okay, you need to decide that before the week starts. If you can decide, or you can have the idea, or you come to the conclusion of how the week is supposed to trade, that's it. That is all you're gonna need. The rest is patience, because if we are bullish and then we start and price is going down, you need patience. Let it go, let it go, let it go. You can mark levels, aka you can go onto the daily time frame and find a fair value gap and then mark it. You can find an auto block and then mark it, and then just sit and wait. Let price continue going down. Let it hit the gap or let it hit the auto block, and then wait for time. Another element, wait for time. The low or high is gonna form during a kill zone, mostly landing on New York session. If it does not happen during that time, that is not true reversal. Okay, if it does not happen either one of these two sessions, that is not true reversal. That might be manipulation. They will come back down again and then reverse during the landing on New York session. Okay, so the reversal, okay, needs to form during the landing or New York session. So once the reversal forms, that is when you start going in every session, the times that I've given, which is landing between 8 to 10, and then New York session between 2 and 5. That is when you start looking for any auto block, any fair value gap that forms on the M15 or the M5. When the reversal takes place, that is when you go into the 5 minutes or the 15 minutes. Look for any fair value gap or new auto block that forms during the New York session, and then you can trade them, because from that time going, any PD array that forms will be respected because they form the low of the week. So price will be respecting PD arrays to expand up. Now, it's not going to expand up because of the PD array. Let me make that even clear as well. It's not going to expand up because of the PD array. It's going to expand because of time. So the gap itself is useless if time is not involved. Okay, the gap will be useless if time is not involved. So if, let's say, price starts going up here, and then you decide I'm gonna buy during the Asian session, I see a fair value gap, I see another block during the Asian session, and you try to buy that, good luck with that, because there's a high probability it might not work, because that particular time window is designed for manipulation. The price action happening during the New York session, during the Asian session, is manipulation. It's not real. It's not real data. Now I made a comparison to what happens when you're moving during the when you're doing stuff during Christmas. Okay, when you're doing something during Christmas Day, there's a lot of emotions, and there is a lot of energy. Well, energy, emotion is energy in motion anyway, so it's both here. There is a lot of emotions being used, right, during that particular day. You exhibit a lot of emotion. Now, the higher the emotion, the more easier you're gonna recall what you did that particular day. So till date, I still remember some stuff I did during Christmas in my childhood, right? Because those are times that as a kid you're very, very, very extremely, like, you're in a state of pure joy. Okay, so you will have memories. Now, it's because of that particular day, which is an event. So the same thing with price action. The time of the day is important because of the amount of emotions that will be displaced during that time. Now, if you look at New York session, okay, the whole world roughly will be up during that time of the day. London, you have the other side of the world, which is, the state on the left. On my I'm trying to, on my left hand, okay. If London is in the middle, on my left hand is the east or the west. The east, where you have the time zone minus, and then to my right is the time zone plus. So during the London session, since it's minus to my left, you have the East Coast, New York, Canada, all these South America, all these people, they are sleeping. Okay, so there's a high probability there will not be a lot of traders online. But New York time, you have those side of the world awake, they are in the morning, and then you have on my right the plus people. If you look at like Russia, China, India, they are not sleeping. It's like late in the evening, right? So they are also high awake doing stuff. So during that particular time, which is this New York time, both sides of the world are all up and they'll be looking at the market. So the emotions that is gonna be generated during that time of the day is gonna be very, very high, extremely high. That is why it makes the New York session price action very important. That whatever is happening during that time, you can compare it with what I was saying earlier about Christmas. Okay, it's an event of the day that a lot of emotions are going to be generated. Hence, that time of the day is what you want to be looking at the price action, because that is true delivery. That time of the day, that is true delivery. So if a gap forms, that gap is intentional. If an order block forms, that order block is intentional. And then you also have London. London can also work, but it will work more better in New York session than in London, because London might sometimes be manipulation. Okay, but New York mostly is going to be delivery or reversal. That's it. It's going to expand or it's going to reverse during the New York session. So if you're bullish, it's going to expand. If you're bearish, it's going to expand. If you're not, and we are at a level, then it's going to reverse. All right. So I've just given you a blueprint of how you want to be navigating the market. Okay, now this does not apply to cryptos. That's why, like I said, don't put all your eggs in one basket. You can do cryptos, but do a little bit of the fiat currencies and indices as well, because those are very easy, in my opinion, to predict what they're going to do than on cryptos. Okay, if you just follow what I've just said here, trading the fiat market or the currencies or the indices are going to be very easy. Okay, so I've taken my time to explain this. So every single week, that's why personally I don't like the idea of trade giving you a trade idea. Not that I can't, but these sort of things, mechanisms happening behind the scene, if you don't understand it, I can give you a buy, and if it does not play out, you might not understand what is happening. I do, but you don't. So I prefer you learning. So when I give an idea and it goes against you, you will know why it did, and you can either re-enter or wait for the right time, and then you can re-enter. Okay, I think I've said a lot anyway. So all that to say, all that I was ranting about was to say that this might be the low of the week. That's what I was just trying to say, because they've now manipulated to the downside. So from the weekly perspective, right, this here is what should have happened at the beginning of the week, but they took it up first for a reason. Okay, they took it up first for a reason, and now we are seeing there, and you can see gold, right? The same thing applies to gold. I gave you the level that they're going to reject from right here. These candles, the fair value gap, they're going to form the low, take out, and then reject, and they're doing exactly that. What makes you what's the word I'm looking for? What do you think is happening? Is it not the opening price over there, and then they are manipulating to the downside to a level, a fair value gap, and then you wait, price is going to reject. When it rejects and it starts going up, that is the low. So going up, you can then look for any fair value gap, you can look for any order block, and you buy it rather than chasing it when we opened. Because when you open, you don't know what it's going to do, especially if it went up first. So all this movement to the downside was manipulation, and now they've rejected. So we're going to go back up here and then potentially trade towards that high. Or they're going to trade and go inside this gap first, closing this gap first, and then yesterday I gave you the narrative that they're going to take out this low and then go up. Crude oil, they're going to reject either here. I think I gave you the I gave you this gap. I gave you this gap that they're going to reject, right? It did reject, but it happened during what? Outside time. Okay, it happened outside time of the day. So it needs to do it during a time of the day. So what time is it now? London, New York. And then it's giving the rejection. So this is gonna break that low, and then it's gonna come for this low. Why? Because from the weekly perspective, we are meant to be taking out a low. The previous week high was taken over here, so we need to take out the previous week low. So all that movement to the upside was the trade above the opening price, this one, Notice it traded down first, Monday, Tuesday. If we are bullish, that's what we would have expected. But if we are bearish, that's not what we want to see. So it needed to come back above the opening price. And that's what it did here yesterday in that level. But the time was not right. So this is not a breaking structure. Okay, this is not a breaking structure. This one is, because it's happening during a session. Okay, so hopefully I've given you something to ponder on, something to use on your your daily analysis. All right. So with that said, euro, we might resume going up. So during this New York session, I think that dollar index has traded through that down candle or the gap. So we will resume coming back for this low. Again, notice where the opening price is and how price went all the way up first. So now we're going to reject and then go down. Okay. So after this current candle, we're going to be expecting a continuation to the downside. All right. And I actually gave a little strategy to some friends of mine, and I'll share it tomorrow, because let me go through the rest of the price action, and then I'll share that tomorrow, so that you can also use it in your trading. So with that said, we're going to be expecting a continuation to the downside on dollar index to attack this equal low, and euro, you'll be looking for a buy. British pound traded to that level, you'll be looking for a buy. Now you can choose which one you want to trade. Australian dollar, same thing. The New Zealand dollar, same thing. Another good one will be dollar CAD. Dollar CAD should also continue going down, because it went all the way up Monday, Tuesday, Wednesday, including Thursday, and we are breaking structure now, so you can look for a continuation to the downside. Gold, you can look for a continuation to the upside. Crude oil, a continuation to the downside. The indices, also a continuation to the downside, because we went all the way up into that weekly fair value gap that I talked about. I said that we needed to go down. So if you go up here, if we trade through this, we'll be going up to attack the high, and they did that overnight, and now we are rejecting. So again, I would like to see this down candle being broken, and then once that candle is broken, then I'll expect a continuation to the downside. So they need to break this down candle, and then you can expect a continuation to the downside on the indices, because they've traded to the last area where we need to reject and then start moving lower, especially if you look at where the month opened. Since the month opened 1st May, we never manipulated to the downside. We always went up, 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 up. So again, similar to the weekly profile, the monthly profile also does the same thing, where price will be manipulated up to form the high and then go down. Now just be patient, let them break the structure. All right, when the structure is broken, then you can look for a continuation to the downside. Okay. All right. With the cryptos, I think the narrative is still the same. Nothing has really changed. We are waiting for the end of the month, right? They're gonna keep price in the consolidation. I think we've got 3 or 2 more days to go, so they will keep price in the consolidation. I don't want to go too much into giving you some expectation. Just sit and wait, right? Because the crypto market is not the same as the currencies. All right, it's not the same. I wish they were, but they are not. Hence, you need to just trade it on the higher time frame. Lower time frame, really, it's hard if you trade, unless you trade something else. Okay, I don't know if you trade a different style, not ICT concept on the Bitcoin or the cryptos, because ICT concept, time and price does not really, on here is all about price. So if you're gonna use it, then use it on the high time frame. Use the concept on the high time frame, not the lower time frame, because the lower time frame, time is not really a factor over here. Right? So the high time frame is what you use. Hence, just wait, let them finish the monthly candle, and then we can look at how they will use the next month candle to manipulate and come down to form the low and then expand up. Okay, so it goes for all the cryptos, to be honest. Hype, I think Hype is doing exactly what I said it should do, right? A down candle should form. It's actually this candle. If we close, we'll end up leaving a gap here, right? This low to this candle's low, that'll be a gap, and then next month we'll open. You might trade into it. This will become a potential reaccumulation, and then we go up again. Okay, so yeah, let's see. XRP, the same thing. I think XRP has traded into the gap that I highlighted right here, and then we got a rejection, but I don't think it's ready yet to go up. So sit and wait. Let's all wait till end of the month, then we can do something. Tatsuo, they've gone for the low, so that's a good thing. We've got two more days to go. Okay, so after 2 days we will see how price is gonna behave for the month of June, because I think this whole move to the downside on the monthly, this move to the downside on the monthly or even on the weekly, it's all, again, in my opinion, manipulation, and then it might scream up. So expect something like that going into going into next month. And then touch key, we are heading towards that low. We're heading for that low, so that one will also be taken, and then once taken we can start looking for reasons to buy it if we get confirmation. All right, so yeah, that's pretty much it. I've spent time on the currencies for a reason, because I really want people to get this on their currencies. Okay, so that's all for now. Thank you for tuning in. I will see you same time tomorrow, and then we will see what we're gonna get. I think with today's reversal, we might get a trade idea tomorrow, which is Friday. We will get probably expansion happening tomorrow as well, because the high or the low has formed on Thursday, so usually you will have a follow through on Friday as well. All right, it might be happening in London, so during the London session, especially between 8 and 10, you can look for manipulation to the downside. So the first 2 hours in London, if today closes the way I'm seeing it, you can look for the 6 to 7 a.m. or 7 to 8 a.m. in the morning to manipulate down if you're expecting a buy, to manipulate down into this New York session fair value gap. So let me go on to euro here. The next candle, okay, the next candle will create an up, potentially an up candle, and you will have a gap here, okay, or you might have the next candle going up and the next one going up, and you create a New York session gap here. That one, tomorrow you're gonna be looking for London to trade into it, and then you expect a movement up. Now let me give you another thing before I actually go. There is always going to be this move that happens like during the course of the week, okay, during the course of the week on a pair, one pair, you can go through them between Wednesday, Wednesday, Thursday. Sometimes it can happen on Tuesday. It depends. It happened on CAD. Let me bring it on CAD because it happened on CAD. This one here. This one. Okay. On Tuesday, Wednesday, Thursday, one of those days, you will see this sort of gap being left during the New York session. When the high or low has formed, you will see this kind of gap being left, and they will use it to expand for the next day. So if you are looking for higher prices, watch Tuesday, Wednesday price action. If we have formed a low, the New York session, they will leave a gap. That price will trade back to it for expansion for the next day, or they will leave a gap, price will trade back to it for expansion on Tuesday, Wednesday, or Thursday. Okay, it happens every single week. This it looks like this. Okay, so you have either between the 2 and 5, where we have the 2. This is the 2. Now the 2 o'clock, the 3 o'clock, and the 4 o'clock. Those 3 candles will leave a gap. When it happens, place a sell limit in there. Either it will happen on a Tuesday, Wednesday, or Thursday on any pair. Okay, I think if you go through the pairs, you will see when example has formed. You will see it. All right. So this was an example. I actually traded this. I placed a sell limit in there, and then we just crashed down. Okay. So yeah. Okay, that's it. Enjoy the rest of your day, and then I'll see you same time tomorrow for another session. Until then, take care.